Welcome and thank you for listening to this Paragon Edge audio blog. The global payments landscape is entering 2026 with no shortage of bold predictions, flashy buzzwords, and breathless headlines. Everywhere you look, the conversation is dominated by AI driven personalization, invisible payments, embedded finance, and the promise of a fully cashless future. From buy now, pay later evolution to real time cross border rails and biometric authentication, innovation is accelerating at a pace that would have seemed impossible just a decade ago. Yet, beneath the noise of what's next, a quieter and more consequential transformation is unfolding, one that balances cutting edge innovation with the realities of global infrastructure, regulation, and consumer behavior. As payment ecosystems mature and expand into new markets, 2026 will be defined not just by novelty, but by pragmatism. Solutions that scale, integrate with legacy systems, and deliver security and resiliency where it matters most. For banks, fintechs, and payment technology providers, the challenge is clear. How do you embrace emerging payment trends without leaving behind the foundational systems that still power daily commerce for billions of people? Payment trends in 2026 are shifting decisively toward practicality over hype. Instead of chasing novelty, organizations are prioritizing scalable and secure solutions that can operate reliably at enterprise scale. Proven performance, resilience, and long term maintainability now matter more than experimental features. Real time payments continue to expand across global markets, but their success depends heavily on interoperability. Seamless integration with legacy systems is becoming a critical requirement, as financial institutions must support instant transactions without disrupting existing infrastructure or compliance frameworks. Embedded finance is increasingly becoming invisible to end users. As payments fade into the background of digital experiences, reliability and robust risk controls must function seamlessly behind the scenes, ensuring trust and continuity without adding friction. Artificial intelligence is no longer experimental in payments. It is now embedded directly into operational processes. As a result, accuracy, configuration quality, and governance of AI systems have a direct and measurable impact on outcomes, efficiency, and risk exposure. Financial inclusion is accelerating the adoption of hybrid payment models. To serve diverse user needs, digital and physical payment channels must coexist, complementing each other rather than competing, especially across emerging and underserved markets. Finally, resilient infrastructure has become a strategic priority for payment organizations. Downtime, system failures, or misconfigurations now carry significant economic and reputational risk, making stability, testing, and operational readiness essential components of modern payment ecosystems. By 2026, global digital payment transaction volumes are projected to exceed $20 trillion annually, driven by mobile wallets, account to account transfers, and real time payment networks. Governments and regulators are pushing for faster, more transparent systems, while consumers expect frictionless experiences across every channel, mobile, online, and physical. At the same time, cash usage remains stubbornly resilient. In emerging markets across Asia, Africa, Eastern Europe, and Latin America, cash continues to underpin everyday economic activity, accounting for a significant share of point of sale transactions despite the growth in digital payments. Even in developed economies, cash is far from obsolete. Countries like Japan still see over half of point of sale transactions conducted with cash, and households often keep physical money as a trusted fallback during outages, natural disasters, or periods of financial uncertainty. This dual reality, hyper-digital innovation alongside enduring physical payment channels, sets the stage for the most important payment trends shaping 2026. Real-time payments have moved well beyond early adoption and into a phase of true global expansion. By 2026, more than 80 countries are expected to operate some form of instant payment scheme, allowing funds to move in seconds rather than days. The most significant shift is the push toward interoperability, as domestic real-time payment systems begin linking together to enable faster cross-border transactions for remittances, trade, and gig economy workers. These new rails must coexist with legacy banking infrastructure, including ATM networks that remain critical for cash in and cash out services. In this environment, success depends on flexible systems that can integrate innovation without disrupting existing operational channels. Embedded finance will mature into what many describe as invisible finance. Payments woven into non-financial platforms will no longer feel like a distinct action for consumers. They will simply happen in the background of everyday activities such as transportation, retail, healthcare, and government services. As payments disappear from view, however, the risk profile increases. Fraud detection, compliance, and customer authentication must operate flawlessly behind the scenes, placing renewed emphasis on rigorous testing, validation, and configuration across all payment touchpoints, from mobile applications to self-service terminals. In this landscape, reliability becomes the true differentiator rather than novelty. Artificial intelligence will move decisively from experimentation into day-to-day operations. By 2026, AI will be deeply embedded in payment systems, supporting fraud prevention, transaction routing, customer support, and personalization. Yet AI-driven decisioning is only as effective as the systems it connects to. Legacy platforms, including traditional payment processing environments and ATM architectures, must be configured correctly to ensure consistent behavior, regulatory compliance, and predictable customer experiences. Automation does not reduce the need for precision, it amplifies it. A renewed focus on financial inclusion will strongly influence payment system design. Governments and central banks are investing heavily in infrastructure that extends access to unbanked and underbanked populations, particularly in emerging markets. In these regions, affordability, uptime, and simplicity matter far more than cutting-edge features. ATMs, agent-assisted terminals, and hybrid digital-physical models continue to play an essential role. Here, payment innovation is about expanding reach and reliability rather than replacing existing systems outright. And modern tools applied to legacy architectures deliver the greatest impact. As payment volumes continue to rise, the cost of failure grows with them. Outages, misconfigurations, and inconsistent customer journeys can ripple across institutions and even entire economies. By 2026, payment system resilience is no longer a back-office concern, but a strategic priority. Financial institutions are investing in stronger infrastructure, advanced simulation, and configuration management to ensure changes can be deployed quickly and safely. Whether supporting instant payments, EMV upgrades, multilingual interfaces, or regulatory updates, the ability to validate systems before deployment has become critical. At Paragon Application Systems, we've spent decades working at the intersection of reliability and innovation. As emerging payment trends reshape the industry, one truth remains constant. Complex payment ecosystems require disciplined configuration, testing, and validation. Whether supporting legacy message formats, traditional states and screens ATM environments, or enabling modernization initiatives that improve accessibility, compliance, and customer experience, Paragon's tools help institutions adapt without introducing unnecessary risk. In a world racing headlong into 2026, the winners won't be those who chase every trend, but those who implement change thoughtfully, efficiently, and at scale. The future of payments isn't purely digital, purely cashless, or purely automated. It's a hybrid, it's inclusive, and it's built on a foundation of systems that must work every time, everywhere. As emerging payment trends redefine expectations in 2026, financial institutions that balance innovation with operational excellence will lead the way. The technology may evolve, but the mission remains the same: deliver secure, reliable, and accessible payments, no matter where or how customers choose to transact. Ready to prepare your payment infrastructure for what's next? The team at Paragon is here to help you navigate the future with confidence. Thank you for listening today.